Welcome to Trading Nation. I'm Seema Modi. Some dueling calls on consumer staple stocks hitting the street today. Get this, Jeffrey getting bullish on Keurig Dr. Pepper and Procter & Gamble, while Bernstein analysts turning more bearish on some of the pantry plays, downgrading General Mills, Campbell Soup, Kellogg, and Smucker's. Joined by Bill Baruch of Blue Line Capital and John Petrides of Tocqueville Asset Management to discuss this space. And John, you look at consumer staples, they've done exceptionally well over the past 1 year. Your thoughts on where there's opportunity to invest in this space now?
Yeah, I think you need to pick and choose your spots within the sector because, you've really had the perfect storm for consumer staples to rally. You've had this run on the grocery store during the pandemic. You have staple stocks, which are inherently low beta, less volatile, and in a low interest rate environment, they throw off good dividends. So you had really this great three factors driving their growth, and it's a valuation call, and valuations are extended. There's no question the whole group on almost every metric is trading above its 5 and 10 year average. And next year, when you look out forward 12 months from now, they're going to have a really hard time, very difficult comps to face year over year, because right now their margins are growing because they don't have to coupon. They don't have to take any discount to any of their products because where else is the consumer spending their money but on the grocery store? So I think you have exposure to the space, but you have to pick and choose your spots.
Bill, where are you picking and choosing your spots, and how does today's market turn factor into your investment thesis here?
I agree with John. I do think that you've got to be selective within the sector, and I like a lot of the big names, but looking into the pantry, I agree with that you don't need to be overexposed in names like Campbell's, Kellogg. However, I do like General Mills, and I think there's a very great technical setup there where the chart itself took out last year's high very quickly, and then 2018 high is now taken out, and the market's settling in out above there, as you can see in this chart. And overall, there's a new record. Where that record is in 2016 is where it's really setting its sight if it can stay out above about $58. There's support there now at the 618 retracement, which is also a trend line of the floor from that 2018 high. So the longer we stay out above 58, this thing, I like being long. I think it can rally in General Mills.
And John, with the market down about 4 to 5% here for the U.S. averages, do you think dividend-paying stocks will play into an investor's thesis going forward if the market continues to tread lower? And does that ultimately help consumer staples outperform?
So yes and yes. And if you listen to what Chairman Powell said yesterday, the Fed's not going anywhere with quantitative easing for a really long time. And with the U.S. 10-year trading at 80 basis points, 0.8%, where are people getting income? They're going to have to go out the risk spectrum. They're going to have to go into high-yield bonds and preferred stocks and then into common stocks, and they're going to look for those companies and those sectors that have historically paid out a good, solid dividend with a strong balance sheet. And you should see over time, as people are stretching for income from their portfolio, the run into dividend-paying stocks.
Got it. John and Bill, great perspective. Thanks for joining us today. And thank you all for watching Trading Nation. I'm Seema Modi, and we will see you next time.